Good morning and welcome to Business Morning. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Let's kick off with the inflation numbers. The National Bureau of Statistics just released the Consumer Price Index for the month of January. And it shows inflation went up by 16.47% year on year in January. And this is 0.71 percentage points higher than the rate recorded in December 2020, which was at 15.75%. Increases were recorded in all divisions that yielded the headline index. On a month-to-month basis, the headline index fell to 1.49% in January 2021, and this is 0.12 percentage points lower than the rates recorded in December 2020. On a month-to-month basis, the urban index fell 1.52% in January 2021, down by 0.13 percentage points when compared to the rates recorded in December 2020, while the rural index also fell to 1.46% in January 2021, down by 0.12 compared to the rates that was recorded in December 2020. The urban inflation rate increased to 17.03% year on year in January 2021 from 16.33% recorded in December 2020, while the rural inflation rate increased to 15.92% in January 2021 from 15.20% in December 2020.
And when we look at the composite food index, we'll see that that index rose to 20.57% in January 2021 compared to 19.56% recorded in December last year. Now, the rise in the food index was caused by increases in prices of bread, cereals, potatoes, yam, and other tubers, meat, fruits, vegetables, fish, and oils and fats. On a month-on-month basis, the food sub-index dropped by 1.83% in January this year, down by 0.22 percentage points from 2.05% recorded in December 2020. The all items less farm produce, or what we call the core inflation, which excludes the prices of volatile agricultural produce, stood at 11.85% in January 2021, up by 0.48% when compared with 11.37% recorded in December 2020. And when we look at the states now, Kogi is the state with the highest rate of inflation, while Kwara recorded the lowest rate of inflation.
And after a long and tedious journey, Nigeria's former finance minister, Dr. Ngozi Okonjo-Iweala, is now the Director General of the World Trade Organization. The General Counsel of the World Trade Organization made the announcement yesterday after a special meeting. She takes office on the 1st of March. Her term, renewable though, will expire on the 31st of August 2025.
I will say that it's both exciting and daunting at the same time to be here, because I take the reins of the WTO at a time of great uncertainty and challenge. We have the twin shocks of the pandemic, the health side and the economic side, which is challenging so many, including challenging livelihoods around the world. And it has wrought economic devastation in many parts of the world. So the WTO is, at this point in time, is also facing so many challenges. And it's clear to me that deep and wide-ranging reforms are needed. And as I said before, it cannot be business as usual at the WTO. We need to look at the priorities, and I'll speak to them in a moment. Our priorities, the need to modernize our rules. We need to look at what the WTO can contribute to solve the present situation of the pandemic. We need to look at our procedures, and parts of the institution. So much needs to be done. That is why I talk about deep and wide-ranging reforms. But of course, it will not be easy because we also have the issue of lack of trust among members, which has built up over time, both among not just US and China, or US and EU, as many people want to say, but also between developing and developed country members. And we need to work through that if we are to achieve the reforms that the WTO needs to achieve in order to be relevant in this modern age. Trade is very important. Trade makes up 60% of GDP. It's grown by thousands of percentage points over time, and is very important if we are also to come out of this pandemic, both in terms of helping make sure there's a freer flow of medical goods and supplies to deal with the public health emergency, but also for the economic revival and sustainability recovery of the globe. Without trade, it cannot happen. Of course, GDP growth contributes to trade, but also looking at some trade rules and liberalization of trade can also contribute to faster GDP growth.
That was Dr. Ngozi Okonjo-Iweala, the new Director General of the World Trade Organization. Well, you know, sometimes I wonder how she's able to do it. Yeah. I mean, having played some politics here in Nigeria, and I'm sure she wouldn't have achieved all of this without the support of the husband. I don't know, you know, you men sometimes can really be funny.
Women empowerment.
That's what you call it. I wonder how you empowered women. Okay, right. This appointment makes Dr. Okonjo-Iweala the first woman and first African to lead the World Trade Organization. What would WTO under Dr. Ngozi Okonjo-Iweala offer, not just for world trade, but Africa and Nigeria in particular? And how can the challenges ahead of her be tackled? Professor Jonathan Aremo, trade consultant with ECOWAS on Common Investment Market, joins us next. Well, we're being joined now by Professor Jonathan Aremo on the show. Thank you very much, Professor Aremo. Thank you for joining us. Good morning.
Good morning.
Oh, we seem to be having issues there connected. Okay.
I think it's back.
Good morning, Professor Aremo. Thank you for joining us.
Good morning. Thank you.
All right. Now, the first female and the first African to lead the WTO. And coming at this time when we have the twin shock of the COVID-19 pandemic and economic devastation around the world, what are the most challenging issues you see before the new WTO DG?
Thank you, viewers, and thank you, channels, for the opportunity granted me. Number one, I want to say congratulations to Nigeria, congratulations to Africa, and especially congratulations to our women in Nigeria. As the incoming DG have said, I quite agree with her that there are quite a lot of challenges within the setup of WTO, and therefore there's a deep wide-ranging things that ought to take place. I was physically present at the last ministerial conference of the World Trade Organization at Buenos Aires, Argentina, 2017. And one thing that was highly disturbing was the fact that there was no consensus after the meeting in December 2017. And the next meeting, which was to be held last year, put in hold. And just as the incoming DG said, there are quite a lot of issues with respect to the principles, the rules, lack of trust. That is true. And therefore, there's a lot of work for her to do. The outgoing DG, as is Roberto Afendo, who was the 8th DG of WTO since 1947, when GATT, General Agreement on Trade in Tariff, was set up, equally was disappointed at the closing remark. So I think that the new DG has a lot of job. But Madame is capable. She has over 30-something years of experience in World Bank and elsewhere. So Nigeria, it is up to us, and we need to prove our capability. Nigeria will do it. That woman will do it. Let us support her. Congratulations to all Nigerians.
Yes, Professor. So aside from the COVID-19 pandemic that devastated the whole world, WTO faces some challenges such as lack of trust, as you mentioned, among the member countries, procedural issues, the issue of dispute settlement system. And the new DG says the organization needs reforms and it's not going to be business as usual. What kind of reforms do you hope to see in the WTO?
Yeah, one of the greatest reforms, particularly to us in this part of the world, is, you see, WTO has always been blamed with what we call the green room decisions. What do you mean by green room decisions? You see, the carpet of the Director General of WTO is of green color. And you discover that developing countries and least developed countries are never invited when critical decisions are taken. And therefore, the first and the foremost decision is the inclusiveness of all the countries in the decision-making process. Not a situation in which America will just say, this is what we wanted, and it has to be done. Or Russia will say, this has to be done, else we shall not go ahead. We all have the same stake in the global world. It's a one planet. And therefore, the first and foremost is to ensure that there is that inclusiveness of all the countries concerned. In this part of the world, we are the most affected by situations of lack of respect to the laid down rules and regulations. And we are the most disturbed, having a terrible history from our colonial past to neocolonialism, as well as to the fact that quite a lot of the global economic governance institutions, WTO, World Bank, and IMF, they have not been actually engaging in policies that we actually alleviate the problem with developing countries and least developed countries are facing. So these are deep-tech things which must be tackled. And the new DG was quite correct, and I support her in what she was saying. You see, when we were preparing for 2017 ministerial conference in Buenos Aires, Argentina, in Nigeria, we packaged a lot of things as our expectation. By the time we got there, because of other decisions, because of the fact of a lot of democratic deficit decisions that took place over there, many of these things will not go through. Why? Because quite a lot of developed countries discovered that they must have their ways. So this time around, we are not saying that the new DG should pay attention to developing countries alone, but the principles of inclusiveness must be fully entrenched to be able to justify that it is actually the entire world.
Yeah. Okay. Yeah, Professor. Now, the first and major challenge before Madam Okonjo-Iweala, she did mention that in her press conference, is the issue of the COVID-19 pandemic and, of course, the distribution of the vaccine, particularly to developing countries. Now, what can the WTO do to tackle this problem, considering that some countries have their export restrictions and prohibition?
Excellent. Excellent in the sense that the first point of call that the pandemic is causing is to disturb trade. And therefore, it is the duty of World Trade Organization to ensure that trading among people, particularly in getting the needed vaccines and quite a lot of other things that serve as input in production process, they are not being disturbed by the pandemic. So I believe that at their first meeting, they will ensure, immediately Madam resume, they will ensure that this critical area, particularly smooth process in the way in which trade should flow from developed to developing country, from developing country to developed country as well, would be put in place so as to ensure that all the kind of various politicking between China, which is seen as a developing country, and America, all of them will be put to rest, and there will be confidence in the system. The confidence in the entire system has actually been lacking for quite a long time. And it's more serious now as a result of COVID. Why? Because a lot of doors have been shut to some levels of product. Oh, they are not okay, and all this kind of way. This is COVID. So I believe that, as Madam said, the incoming DG said, I believe that she could tackle it. Having that experience in World Bank, where she has been able to tackle problems affecting the entire global space in the World Bank. So she can do the same thing.
Okay, let's look at the digital economy now. E-commerce is seen to have grown, particularly with the emergence of the pandemic. With the digital economy becoming very prominent now, how can the rules of the WTO be modernized to bring them up to the 21st century issues? Because currently, I'd like to know what the rules are concerning these digital economies.
That's well, a very valid question. You see, at the discussion of the WTO ministerial in Argentina in 2017, e-commerce find its way inside, and it was actually seen as a discussion that will have to take place in the next meeting. So e-commerce, I mean, nobody was suspecting that pandemic will come up at a particular time. But e-commerce was becoming very prominent in facilitating trade. And therefore, since pandemics have come in now, that means that we have to give serious attention more than ever before to the issue of allowing the e-commerce to actually play a very important role in facilitating trade, because physical contact is becoming difficult, yet we have to trade among ourselves. So e-commerce is the way to go. So quite a lot of other things, like even e-payment. Look at what is happening in the African Continental Free Trade Area, in which AU said, through the help of AfriSIM, we are going to be using Pan-African payment system. That is to say that instead of trading in international currencies of dollar, euro, and pound sterling, we shall be trading in our own currencies. I can buy anything from Kenya and pay the Kenya exporter in shillings. And then I'll be debited in my own naira in Nigeria. And then the use of international currency will be minimized. This is one of the wonderful jobs of e-commerce. So in the next discussion of WTO, this is one of the main things that will come up. And I'm very sure that it's coming up, and then a position will be taking place. Even in African Continental Free Trade Area, e-commerce is mentioned as either coming up in this next phase 2 or phase 3 of the African Continental Free Trade Area.
So talking about the African Continental Free Trade Area, of course, that kick-started in January. So what is the significance of this to the realization of the objectives of WTO, and how can the WTO also support the AFCFTA to achieve its success?
Okay, wonderful question again. You see, WTO right from the beginning, even from the time it is General Agreement of Trade, General Agreement on Trade and Tariff, until it's transformed to WTO on the 1st of January 1995, Article 24 actually allows countries to go into economic integration, as we did under ECOWAS, as we are now doing under African Continental Free Trade Area. So in fact, when an economic integration is concluded among nations, they have to be in line with what is in World Trade Organization's guideline of Article 24. And after that, you discover that WTO have a role to play, because henceforth, those contracting parties in such an economic integration arrangement will be acting, and I'm very sure as European Union did, particularly under the last ministerial conference in Argentina, as a bloc. It is unfortunate that we attempted having a bloc in Africa under the Argentina meeting. It wasn't really possible, because some of the things like the investment facilitation which Nigeria brought forth at that meeting, some countries in Africa did not support us. So, but elsewhere, because of African Continental Free Trade Area, there's likely to be a sort of a position which the entire Africa will be putting across in the next ministerial conference of WTO.
All right, Professor. Interestingly, we have a Secretary General of OPEC, a Nigerian. AFDB president is a Nigerian. A Frexim boss is a Nigerian. And now we have the WTO. Do you see any risk of backlash and resentment here, having Nigerians occupying these major positions in these multilateral agencies?
Well, those individuals you are mentioning, they got to that position because of their wonderful qualifications. Well, and therefore, in Nigerian economy also, we have to make sure that the way we sequence all these trade agreements, whether it is regional or multilateral, they have to be done in a way that will be to the benefits of the country. And right in the country also, there must be appropriate domestication of these policies. Because if they are not domestically put in place very well through National Assembly and other relevant ministries, agencies, and departments of the government, we are just going to be hearing quite a lot of these things. Nigeria is there, but the impact may not be as expected. Instead of giving very wonderful positive contribution to the domestic economy. It's not that Nigerians are there. What are we doing in Nigeria to have very good policies?
Okay, thank you very much,
Thank you,
Professor Aremu, for your time. And do come again when we invite you. Thank you. We do appreciate your time.
Thank you.
And commodities market update is next. Do stay with us.
And for the commodities market update, Bolanle Agbaje, research analyst with financial derivatives company, joins us now for the commodities market update. Thank you for joining us.
Good morning, Bolanle. Good to see you.
Good morning. Good morning.
Good morning.
So you projected the inflation rate at January to be 16.2%.
Yes.
But we are seeing 16.47%. It's still an increase, but higher than
What we
your
had
projection.
expected. It's still in the same, trajectory. Anyways, it's just a few points off, but it's still, in line with what we had or what we see in the market.
Yeah.
Really, typically in January, we most likely see, a fall in inflation due to the post-Christmas blues and all of that. But obviously, this year is peculiar. We're still seeing the impact of, the COVID-19 playing or giving, surprising numbers when it comes to, some of these economic figures. But yes, inflation has increased to about 16.47%. Particularly month-on-month inflation has declined. So it's good news in the sense that it's showing that inflation is moving to a point where, would reach a particular peak and most likely, start coming down, hopefully, within the next few quarters.
Hopefully we don't exceed the peak.
Hopefully we don't.
But food inflation
but
continues to skyrocket.
It does. But obviously, looking at the reasons behind this, we've seen that food inflation has more or less, surpassed the 20% mark.
Yeah.
And that calls to question what's happening in the market, despite the fact that aggregate demand has been declining. And what we've seen is that you've been obviously talking about, the herdsman's clash, which has significantly affected supply. In the north, I think I saw the news yesterday that, there was already another fight going on in Ogun State. We had seen, in Oyo. And you mentioned earlier that the highest or the second highest level of inflation was in Oyo. Kogi was the first, and then Oyo, was the second as well. And
then Bauchi.
And Bauchi. So those are the signs that, the impact of aggregate supply in the markets is being felt significantly. And also you have the exchange rate pass-through effect. Current level of exchange rates in the parallel market is about 460, 470 naira to the dollar. We're also seeing in the IA window, the exchange rate also depreciating significantly to about 409, which is more or less moving to the true value of the exchange rate. But this multiple exchange rates in the markets obviously causing a lot of confusion, adding to the price. Another important aspect of the inflation numbers is the PMS as well. At this point, landing cost of PMS is at 180 naira. And I think, these marketers are selling, or the average price they're selling at is at 167. I don't know if you saw any signs of it this morning. We've seen, panic buying amongst, or in most of the filling stations, at least in the metropolitan cities.
So people looking ahead of perhaps possible increase in the petrol.
Prices. I think as at yesterday, we had seen, there were just signs of the panic buying. But as at today, it seems like, some of these marketers are hoarding to the point where they can,
And incidentally, oil price has continued to, go up, currently at about $63.
Yes.
So that, again, is also putting pressure on downstream sector here.
Definitely.
Because of the deregulation.
Yes, and it's not just Nigeria, everywhere around the world. The typical thing you see is once oil prices are increasing generally in the world economy, you should see that pass-through effect with gasoline prices or pump price within the economies. And it's a natural phenomenon or economic phenomenon of demand and supply.
Now, when you look at the core inflation, all right, it's up again 11.85%, from 11.37%. Does that matter to you?
Well, it does in the sense that, the drivers of the core inflation in particular would be the electricity tariff and the pump price, like I mentioned. So it would definitely, have a negative impact on transport, cost. And this costs more or less feed into the cost or the total cost of some of these manufacturing companies, which, would be passed on through to the consumers, depending on the elasticity of the particular products that they're selling. So it's definitely a cause for concern. It's more or less a different side to the story when you're looking at inflation numbers. We looked at the food side, and the core side is more or less the transportation costs, as the most important thing.
Now, looking at the trend that inflation is going now, and looking at this economic scenario and the things the policymakers are grappling with, do you see any quick fix or an answer to this inflation trajectory?
Okay, so in answering that question, when you look at from the economic point of view, you have what is called like a Mundell-Fleming model, where you have like 3 items: fixed exchange rates, free capital flows, and fixed exchange rate, free capital flows. These 3 items are, you cannot have the 3 of them at the same time. And obviously, independent monetary policy, you can't have the 3 of them at the same time. At this point, the central bank is more or less managing the 3 kind of at the same time. But in most developed economies, most of them find themselves on the side of independent monetary policy and free capital flows, and more or less leave the fixed exchange rate aspect of things. So now we've obviously been talking about the CBN moving away from moving towards the flexible exchange rate regime, so that, the market is a true value, or it reflects, the true value of the
But do you
exchange
think we are beginning to achieve that? Because, you just talked about it. The Naira now at the I&E window depreciating to about 410, and then we're seeing that appreciating in the parallel markets, and we're beginning to see that convergence. Yeah.
Yes, so, the IE window is more or less like a reflection of what, the market is supposed to be like. So it's reflected on what the demand and supply is saying. So if the IE window is moving towards, that depreciation aspect of things, it shows that the true value is what it's moving, towards. But at the same time, the central bank is left to, work on different aspects of the economy at the same time to achieve, these lower inflation numbers, and at the same time achieve higher levels of, GDP growth. So when you're looking at what the CBN should be doing, they're more or less, supposed to be intervening in the market, looking at the trade aspect of things. Forex rationing is a big problem at the moment. So when you have Forex rationing, you're not going to have that convergence that you're supposed to clearly see in the market. And then obviously the GDP growth, and more importantly, the negative real interest rates, which is also a big problem. So ideally, we've realized that working on these things, working on it at the same time or simultaneously, is what would actually, drive us to.
But what do you think will be the next move for the MPC at this point?
So we believe that when the GDP numbers come out next week, the CBN had predicted that in Q1 2021, we should see like a recovery or a positive GDP growth. But at this point, I don't think that is what will be realized. Q4 GDP growth, or Q4 2020 GDP growth is going to be out. And the consensus is that it will possibly be between -3% to about -5%. We are, looking at -4.6%.
So do you think they will possibly raise the rates?
It's a likelihood, but I know that they would more or less come into the market and do something before their next MPC meeting, because they wouldn't definitely not leave the market, hanging this way when you see the GDP figures next week.
Yeah, we were speaking with, or rather we spoke with the former central bank governor, Deputy Governor Tunde Lemo yesterday, and he's of the view that it's time the central bank began to, do its inflationary targeting.
Yes.
Okay, and then forget about interest rate. All right, so you think so too?
Well, inflation targeting is just more or less creating a band where your inflation targeting is more or less creating a band for your interest rates. So where your, interest rates do not, cross or go above or below that. So it's only when the interest rates go above or below that target is when you come into the market, or when you come in and do something about it. So it's more or less what you have in the US, for example, and or the Fed rather. So more or less, you have an inflation targeting of about 0 to 1%. So when you have interest rates going above that, or inflation going above that
But we've seen inflation going above the rates that we're seeing right now.
What would be the implication for the commodities market?
Well, obviously, in the short term now, well, obviously with the impact of the PMS, we definitely see commodity prices inching up slightly. Although in the month of February, commodity prices have generally, gone down, more or less the inelastic side of things. But on the elastic side, we're seeing, a hike in some of their prices. But I don't think we'll go back to where, we were last year when we saw at about 72% hike in prices from January last year and January this year.
Okay. All right. Take us through the domestic commodities price movements and perhaps their major drivers for the week.
So as of today, domestic commodity prices are, trending downwards. We're seeing fall in prices of tomatoes, bread, peppers, onions, gari, beans. I think had, beans is stable, but the likes of yam, semovita, more elastic products, you're seeing a hike in the prices of those particular goods. But I think this is not what we'll probably be seeing as of next week.
Anyway, let's hope at this rate, because they said when people expect the rates to continue like this, they want to hoard.
Yes.
They want to buy for the future and stock up.
Yes.
And that can also
boost prices.
So.
Yes,
now that we're beginning to now see oil trend higher, $63 at the moment. Do you see this trend continuing, for long?
As at now, we don't see any reason for the oil prices to actually decline. Right now, we're seeing constrictions in supply in Texas. I think that's what's driving oil prices at the moment. The winter storms. Demand is at about 69,000 megawatts. Demand for energy. This is about 3,000 above, what it was last year, or in 2018, rather. And the significant push in demand and the fall in supply is definitely great news for oil prices. I think the only thing that would, more or less push oil prices, the trajectory, the opposite way would be, a boost in supply, or any, if OPEC comes in to say, they're no more working on the quotas and all of that. But it's great news for Nigeria. We just hope that, if oil prices follow this trajectory in the short term, OPEC can come to meet and, more or less increase.
Where do you see the price peaking at?
To be more optimistic, we're looking at about $65 per barrel, but we're still hoping that it would cross that in no time.
And for the agri-commodities, what's your outlook?
Well, for agri-commodities, it's still the same trend with demand and supply. The good thing is the vaccine rollout has been maintained and sustained and increasing, which is great. So we do expect that as this is happening, the prices of most agricultural products would find their true value.
All right, thank you very much, Bolanle.
Thank you so much.
Thank you for your time.
Thank you.
Okay, we take a moment and we'll be back. Okay, let's look at the markets now with Ini John Bekwa. Well, Ini, some kind of cherry picking yesterday, and we saw the bull come out, but I'm just wondering if that will continue.
Well, I'm wondering with you too. Well, good morning. Yes, the market ended in a green yesterday, and that's because after 2 weeks, well, it is expected that investors would actually, buy the dip. So that's what we see. But anyway, to tell us more, we have David Adonri, a stockbroker with High Cap Securities. Hello, David.
Thank you. Good morning. Pleasure being with you.
Yeah, good to hear from you too. So do we expect this positive mood to continue all through the week?
I may not sound very, very optimistic, neither am I pessimistic. But I would say that we are in a stable market condition, wherein we would see a little volatility in the market, up and down, but at a point of a dynamic equilibrium. Yesterday, the market appreciated a little bit, and that was because of the impact of the rising crude oil price on the oil sector of the market. It was principally Seplat that drove the market up yesterday. So perhaps the market may have reacted to that development. But I listened to your report now that the situation in the U.S. is still very, very serious, such that energy demand is still very, very high. So we can still see the impact on crude oil price and demand that may propel the petroleum sector of the market. But that notwithstanding, there are also downsides that are threatening the market. Because if you look at the report that was released early this morning for inflation figures, you will see that it has galloped to over 16.45%. So that in itself has put a lot of asset managers and investors on the alert, pending when Nigerian Bureau of Statistics release the GDP figures for Q4 of 2020. So that could pressure the movement of assets a lot to debt. Because we're already seeing some indications that the yield on debt is increasing as asset managers divest from secondary market for bonds and are probably hoping to reposition the primary market, considering the fact that escalating inflation rate may pressure the monetary authorities to abandon the expansionary monetary policy that has essentially driven the equities market and overheated the foreign exchange market. So we're actually at a delicate period now where everybody is on the alert.
All right. Okay, thank you so much, David, for that analysis. Well, let's just look at the figures just a little bit. Well, the all-share index added 0.33%. The equities cap went up, obviously. But, I mean, the volume, the value, the deals, everything was in red, like David has just explained. So it's just a reaction. And then the banking sector, Zenith Bank especially really did well yesterday. It boosted the sector up, and then came consumer goods, industrial goods. And going to the unlisted securities, there was 0.37% increase, and the market cap there was 529.95 billion. Going further, the volume in 3 deals, they had 7.481 million naira. And then the federal government bonds for yesterday had 27 deals. And of course, we also had the treasury bills. We have a lot of them that are anyway. We have Mr. Jibola Ero-Phillips to tell us more. He's the head of Forex Trading, FBN Quest Merchant Bank. Hello, Mr. Ero-Phillips.
Good morning.
Good morning. Good to hear from you. Well, what's your outlook for the Forex market this week?
For this week, we'll still see the Naira being under pressure. Once it crosses the 400 mark, the only way for it right now is way up. But I still think that there's still a resistance level at 114. But yeah, market is still going to trade within that band. Liquidity is still a bit tight because we're not seeing as much flows that you would regularly see in the high market. So because of that, the Naira is under significant pressure. Markets are a bit calm this morning. We're still trying to see if we're going to get any offers in the market, but not much is happening in terms of liquidity.
All right, thank you so much, Mr. Ero-Phillips. And, well, that's all we can take now. I know, Chimi, you had a little bit of good news. Are you happy this morning?
Well, not, I don't know, just to mix a bag there. We can't really say it's time to celebrate what we saw in the equities market. Just like Andori said about the inflation numbers and, of course, the trend we're beginning to see in the fixed income market. But we'll see how that goes. Yeah, we'll take a break, and then when we come back, we do an opening call to London. Okay, let's talk to Juliana. Good morning, Juliana. Well, we have seen the new WTO DG, the person of Dr. Konjo Iweala. Now, what does the UK hope to see from the new WTO, particularly with Brexit and, of course, the issue of vaccine distribution, which Dr. Konjo Iweala says is her priority?
Good morning, Chimeze. Fresh leadership is always a good thing. And I think Britain joined the rest of the world in hoping that this new fresh DG will provide some new reforms for the WTO, because that's what's desperately needed. I think, away from the congratulations, it's going to be a pretty tough job. The WTO is in its most critical state in the past 25 years. And of course, COVID is one of the main reasons. But I think for highly developed countries, vaccine nationalism, which is Dr. Nkojo Iweala's main priority, isn't their main priority. Their main priority really is fairness and reform, particularly when it comes to China. Liz Truss, she is the Trade Secretary, and her job has been made increasingly more difficult since Britain decided to leave the Economic and Political Union of Europe, because at the moment we've only managed to secure just a handful of free trade deals. And so she, a couple of weeks ago, did join the chorus of other government leaders asking the WTO to look at its policies and to make sure that fairness is for all, and not just for China, who they've accused of using state enterprises and trade subsidies to top up, their economic policies and downgrade others. And this has been a long-running dispute, not just from the Trump administration, but beyond that. However, Biden has, of course, showed his warm support. So, yes, we're all hoping the WTO gets its reforms under this fresh leadership.
Absolutely. Well, a leading Tory MP is calling for post-Brexit reforms of UK competition law. What areas does John Penrose hope to see the reforms?
Yeah, John Penrose, he's a Conservative backbench MP, pretty prominent. Last year, he was commissioned by the government to produce a report looking at some post-Brexit digital changes that could help cut lots of bureaucracy and red tape when it comes to the Competition and Markets Authority. They're the regulator that look after competition. He's released his 96-page report today. A lot of it is a little bit dull, but basically what he's asking the government to do is ensure that the CMA is prepped and ready to have more power to kind of target individuals and firms that don't comply with their investigations. As to be expected, on top of the list are the big tech companies, Google, Facebook and the likes. They don't pay, they don't charge customers to use their services. But of course, when you are using Facebook and Google, they are looking at your data, and it's through that data that they're putting adverts in front of you. I think that a lot of this is disguised as cookies, isn't it? So he believes that it's completely unfair, and that, people are kind of being told what to buy because you're seeing it constantly on your screen. He's also asked for the government to improve consumer confidence and lower cost for businesses. So it's an interesting, rather long report, basically asking of the government to tackle down more on these digital companies. And
the travel sector is stepping up its ignore the government messaging with the launch of a campaign to reassure consumers that it is safe to book holidays for this summer. They are putting pressure on government to allow holidays abroad from May 1. Is this something the government will look into, considering the ramping up of vaccinations?
Well, yes and no. We can't be in this lockdown forever. We've been in the lockdown for a very long time, since about the 18th of December. I can't even think of what the date is now. It's been that long, Chimeze. And there are some very angry calls. One of them is from this group called Save Our Summer. Many of them are backed by a lot of the tour operators here in the UK, and they are asking people to just ignore government advice and book holidays. And we know from the data that's been provided by some of the airlines like EasyJet and Ryanair, that's exactly what people are doing. They are ignoring the government calls. We're expecting on Monday Boris Johnson to finally outline how we're going to get out of this lockdown. The only date that we're certain of is March the 8th, which is when we believe school children will be allowed back into schools, though there are lots of union leaders that are saying it's far too soon. But we just don't know. I think, Britain have gone so far in, inoculating its citizens that there's absolutely no way they're going to allow a complete lifting of restrictions if they feel that the public are not ready for it, though we do keep our fingers crossed.
Surely we do. And I'll talk to you later.
Thank you.
Okay, let's look at the cryptocurrency market now with Ladi. Well, Ladi, Bitcoin still ranging.
Yep, still raging. The battle for 50K rages on. Some believe that Bitcoin has reached its peak and we should expect a major correction. But some also believe we're going to $100,000.
Oh.
So we'll see how that goes. Let's talk to Wilfred Michael now, a crypto trader. Hello, Wilfred.
Hello, Ladi. Good morning. It's my pleasure to be on with you.
Good morning. Great to have you on the program. How are first world countries dealing with cryptocurrencies?
Okay, so I actually went through the press release by the CBN. I noticed some countries they say are not, they have placed a sort of ban on cryptocurrency. And Canada was one of the countries that they mentioned. But research shows that cryptocurrency is not banned in Canada. Banks are free to process cryptocurrency-related transactions as long as somebody is trading on an exchange that abides by anti-money laundering rules. But when you talk of the UK and United States, which are countries that we actually should be looking up to when it comes to cryptocurrency, we know that in the UK, for instance, the Financial Conduct Authority, they are the body that regulates cryptocurrency exchanges and businesses. So cryptocurrency transactions are not under any sort of ban in the UK. Even as we speak now, in the UK, they have a temporary registration program for companies in the cryptocurrency industry. So that is how the UK is treating Bitcoin and cryptocurrency. Now, when you move to the US, just last July, the Office of the Comptroller of Currency, that's the Department of the US Treasury.
All right, Michael, sorry we've run out of time. Thank you for joining us today, and we'll catch you another time. All right, so the market cap stands at $1.49 trillion. The 24-hour volume went down a lot, down 7% at 8 a.m. this morning. Bitcoin dominance still at 61%. Price of Bitcoin, $48,973, up about 4%. 24-hour volume, $73 billion. We have the top gainers here, KSM, Atom, DGB. So, Chimi, you see the altcoins are still playing. They're still the better play at this point, since Bitcoin hasn't broken that 50K, because once it breaks that 50K, altcoins are going to
Don't
suffer.
even talk about the 100K. Don't
100K.
just talk about that.
Yeah.
Well, I guess for anybody interested in this crypto market, or perhaps whichever asset you want to buy, maybe the altcoin should be it, because you keep talking about buying the dip, and these are the ones that are
exactly.
in the dip. But you didn't tell me where the Doge is now.
Dogecoin is still, it actually went down today about 7%, give or take. So
perhaps
the Elon Musk gas is kind of wearing down at this point.
I see.
Yeah.
All right, thanks. Okay, that's a wrap on the program. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.